right. Well, the Treasury Department is looking to get the life insurance industry involved in the $700 billion Troubled Asset Relief Program, according to the Wall Street Journal. For more on that, I'm joined by Joseph Leonard, a retirement strategist and author of The Retirement Vault, a guide to protecting your assets in an age of uncertainty. Joseph, thanks so much for being here. We hear word now that the insurance companies who had applied for access to TARP funds will now get the help that they need, some of which already own some savings and loan operations would give them the availability. What do you make of this development? Is it scary? Is it in line with expectations? What do we read into it?
Well, I think it's in line with expectations. I mean, they've positioned themselves to apply for this TARP money. They knew that some of them, ones Hartford, Prudential, they're in line to get this type of help. So I think it's coming. I think it may not be as severe in the insurance industry, of course, as it was in the banking industry, or as much as needed money that's there. But I think you're going to see other companies start positioning themselves as well to put their hand out for some of this TARP money.
Okay, let's explain, Joseph, to people why it is that the life insurance industry in particular has been impacted by what has happened to the markets and investments, a combination of variable annuities and some of those investments that they make on the premiums they receive. What have happened in those two categories?
Well, they've invested a lot like the banks had as well. They've invested in mortgage-backed securities and other things that looked good on the surface and ended up with the mortgage crisis going bad on them. So I don't think it was as severe as some of where the banks had invested their monies, but they did in their securities that they've used their monies or premiums to spend or to invest for their own company. They've taken those losses just like everyone else has. So they have those toxic assets, so to speak, as well, and they're going to be looking to recover some of that. Now, some of your other insurance companies that were not in mortgage-backed securities, not buying mortgages and those type of things, they have not been hit as severely as some of the bigger companies.
You know, when you look at this industry, there's a lot of questions about the way it has been regulated. The insurance industry largely regulated on a state-by-state basis with no federal oversight and regulator. Obviously, in the wake of all the AIG news, there are questions right now about what the future might look like. If, in fact, they are given access to the TARP funds, do you see a future whereby the regulatory framework that oversees these institutions will change drastically?
I think it is. They're really positioning it to do that already, where the SEC may start controlling and regulate the insurance industry on indexed and fixed annuity business that was only regulated before by the state guarantee associations and by the state insurance boards. So I think that they're positioning that in the next couple of years to have more oversight on the insurance policies and investments that insurance companies are making overall. I think that's coming down the road in 2 to 3 years.
So just before we wrap up here, Joseph, explain to people at home, how does this affect the consumer? Will premiums rise? Will it be more challenging to get insurance?
Well, it is getting more challenging. I mean, I've seen some life insurance policies that we're writing that they're being reviewed more stringently, and they're just not giving the more life insurance out. They're really looking at what these people do and what the risk levels are. I really haven't seen many premiums rising right now, but I think that could be short-lived. That could be coming down the road, that they're going to increase premiums to recoup losses on the bottom line. So it's eventually going to come from the consumer.
All right. Well, Joseph Leonard, we will leave it there. Thank you so much for bringing us up to date. I know we're going to check back in with you at 8 o'clock, and we'll walk through some more of the companies that are specifically impacted by this. Thanks so much. All right, Connell, thank you very much. Well, the Treasury Department is looking to get the life insurance industry involved in the $700 billion Troubled Asset Relief Program. According to the Wall Street Journal, in fact, they may participate as early as a couple of days from now. The Journal says shares of life insurers have fallen over 40% this year. Several of those life insurers have applied for about $20 billion in TARP funds. For more on that, I'm joined by Joseph Leonard, a retirement strategist and author of The Retirement Vault, and Jamie Heller, the Wall Street Journal news editor for Money and Investing. Good morning, gentlemen. Thanks for being here. Jamie, we've been talking about this throughout the morning. Let's talk specifically about some of the companies who are requesting access to TARP funds and why it is they would be eligible. Walk me through some of those names.
Hartford Financial, Lincoln National, Prudential Financial. Some of these weren't eligible when TARP first came into being last year, but they went into contortions to try to get eligible, some of them by buying little teeny tiny banks just so they could count as banks and be eligible for this program. And they've been waiting months for the word from Treasury that, yes, they could participate too, along with the banks. And so today is a very good day for the life insurers.
So Jamie, it's a good day for the life insurers, and yet you and I both know there's either going to be another sense of populist outrage around this country that the government is now has some level of intervention with not only the large commercial banks and financial institutions, but the automakers and now the insurance companies. How does the Treasury Secretary address the fact that it appears as though government backstopping of multiple industries is the direction we're headed in?
It will be interesting to see what kind of outrage we have, if we see the same kind of populist outrage that we've seen in other instances. A lot of consumers have been looking at these life insurers, seeing their stocks plummet, seeing the bleak headlines, and these companies, for many consumers, are the linchpin of their financial security. And they might be breathing a sigh of relief this morning to know that, hey, the government's stepping in and I could take a breather now. At the same time, they might be just as frustrated that these supposedly conservative companies didn't take better steps and are now in these vulnerable situations. Right now, Congress is on recess, so it might be a while till we really get a sense of what the reaction will be. The other thing is we really don't know yet which companies are going to get the money, how much money they're going to get. So there remains a lot to be sorted out.
You know, Jamie, you make such a great point. Joseph, let me play upon that point there, and that is, I think I'm fairly savvy. I pay attention to the financial news. I've heard about some of these insurers that